Sunil Subramaniam joining us this morning. Sunil, good to have you with us. It's an interesting time. We're just ahead of the budget. We're also kind of going over the action in the series. It's been, very polarized with, on one hand, action continuing to be concentrated in some of those core nifty names. On the other hand, we've actually seen a pretty good series when it comes to the broader markets and some of the mid-cap names. So what are you deriving from some of this data that we have been observing in the last month?
I think essentially it's what I've been saying all these last few months in the channel, right? There is a impact of all the actions are beginning to be seen. So you see the manufacturing PMI, you take the services PMI, you take the IIP, you take the business confidence index in manufacturing and in services, all are showing a positive uptick. I'm leaving the coronavirus related very recent events apart. So I think that there is a sense that the worst is behind us and that recovery is not too far. Not to say that it's going to be there right from tomorrow or something, but I think over the next 3 to 6 months, you are seeing that definitely the underpins of economic recovery are there. And the data from the economy perspective for you, all you have to do is look at food inflation. While everybody is kind of saying, oh, food inflation means RBI won't cut rates, I look at it slightly different, because for me, it was the hyper low and in fact sometimes negative food inflation which has hurt rural consumer confidence, and that's why you saw rural people not purchasing things that they would normally do. Now with the rains which came at the wrong time for the Kharif crop, and destroyed the crop, and so onion and potato prices went up. But with the Rabi sowing being so strong, we are looking at sowing patterns, right, across Gujarat, Punjab, Maharashtra, everywhere sowing patterns have been very strong on the Rabi crop. So with a good harvest, with food inflation rising, we are hoping that consumer confidence in the rural sector comes back, and then that will reflect in consumer discretionary. So there are underlying footprints in the economic data which are showing that the worst is behind us. This business confidence is returning, and that's why if you see from a flows perspective, right, actually if you look at it, FIs have put in about 65,000 crores. You're talking about polarized large cap, right? ETFs have put in about 27,000 crores in this first financial year from April to now. So that's 90,000 crores. But of the rest of the flows, you will be surprised to know that pure large cap funds have got 11,000, but mid and small cap have got 16,000 crore net flows into the industry. So clearly there is a lot of smart, hot HNI money which is moving into the small cap. So one of the reasons for the rally is, one is the underlying business confidence, but the fact is that there are people who are looking at the 20% discount of the small cap index to the large cap index and saying, hey, things can't get worse, so why not get in? So that's why you have 6 months return of 14.5% on the mid cap index and about 17% on the small cap index. So I think the situation is ripe for a gradual recovery in the broader market over the next year, and that's what we've always been positioning our portfolio for.
Sunil, one simple answer could pour cold water on the bullish case you've made. Coronavirus.
Yes.
Finally, we agree.
Yes. No, definitely the virus was an unexpected, what they call, meteorite which hit us from Venus or Mars or whatever. Nobody expected it to happen. Clearly, it is a worry for the global markets. And undoubtedly, the Chinese, though, have been far more open about it and proactive about it, I think, compared to the SARS virus. That gives a little bit of comfort. But definitely, yes, how far the virus spreads, we already have a person in India getting infected. So the worldwide impact, yes, over the short term, definitely that uncertainty factor will bake into the market. But I would still maintain, Nikunj, that if there is a stock or a sector that you like from a 3-year perspective, and this coronavirus factor is going to lead to an artificial correction, isn't that an excellent time to buy? Won't you agree with me?
Okay. Small cap.
Sunil, now let's talk about budget. Whereas we all know that budget is not the forum where you want to do economic reforms. But the market messaging post the last budget was direct dividend tax, tax on buyback, tax on super rich, tax on more services, more, corporates were instructed that they have to bring their promoter holdings down to below 75%. Markets got upset. Markets thought that this is an anti-growth budget. So more than the absolute impact, it was the attitude and it was the indication which spooked the market. So if you are hunting
Correct.
for cues in terms of the attitude of the government and approach of the finance minister, what would you like to hear? It's not about LTCG, it is not about DDT. It's about really understanding that what their attitude towards economy is. What is that one thing you would look out for to understand the attitude and the message?
So I would look for two things rather than one thing. So the first thing I would look for is respect for the capital markets. So I think given the fact that on the fiscal side, the government is so hugely dependent on a divestment disinvestment program, and I think they have to look at the capital markets as the ultimate panacea for their problems. And so they have to treat the capital market with respect, with kindness, and with the fact. And Mr. Modi made the statement that wealth creators are, somebody that I like and I will promote. So I think messaging-wise, I think that signal, whether that comes through a LTCG waiver or a delay in the STG, whatever form. But I think the key driver is that the capital markets are the ultimate solution to the fiscal deficit of the country and has to finance the growth of the country, and that respect must come through in the messaging. That's number one. The number two thing I would like to see is everybody knows that the news on the fisc is bad. They went and gave away the corporate taxes. They've cut down their infra spending. The report card is not going to look good. So that's discounted. But what the market would like to see that the government has not lost confidence in actually going and maybe telling the world, look, hey, we are going to live with a slightly larger fiscal deficit in the coming year, but we are going to spend that money on that which creates jobs, that which creates infrastructure, that which creates long-term multiplier effect. So I think the government which is shying away from that gets worried about the fisc and actually starts crunching its balance sheet next year would be a very bad sign. Because I think the world is willing to cut us some slack. And from that perspective, what the market would like to see is a government confident about saying, okay, 3.5, 3.6 for next year, this is what we are going to do, that's the money we are going to have, and this is where we are going to spend, which will boost long-term growth. So I think those two clear signals is what I would like to see from the budget.
I'm going to shift gears and again talk about what's happening in the banking space. Kotak Mahindra Bank is the only standout gainer, and that is making the markets look good. Then you've got Bajaj Auto, which is again making the markets look good. Sunil, I wonder when I look at the numbers which have come from a Domino's Pizza, which is Jubilant Foodworks, Bata, Westlife, which represents McDonald's Burgers, Pidilite, which represents Fevicol. Consumption stocks or consumption companies are not reporting a large drop, at least in their volume growth. So what are some of these companies indicating to you? I mean, are they gaining market share, or this is the real economy which we should focus on? I mean, we may talk about the GDP growth plunging to a decade low, but if consumer companies are growing, there is a slowdown, but this slowdown is not across the board and it is not widespread, because that number is confusing, Sunil. One side we are saying slow down, slow down, slow down. Then Pidilite comes and says, I'm selling more Fevicol. McDonald's says, I'm selling more burgers. Jubilant says, I'm selling more pizzas.
I think this is all a part of a malaise where, since we had got used to 7% GDP growth and were actually thinking India would go to 8 and maybe double digit, and suddenly we have had to course correct and look at downward, is that sense of pessimism has overtaken everybody. So actually, if you look at bank lending, you mentioned banks, right? There is single digit, 5 to 6%, all the way up to 25% in various sectors of bank lending. Only metals and mining and quarrying are the only two with a negative loan growth rate. So a 5 to 6% growth rate in bank financing, whether it's retail, consumer loans, credit cards, whatever, indicates that people are taking the money and doing something. Yes, it could be 20%. That's where the problem arises between what we perceive to be the real India growth engine versus what's the ground reality. But the ground reality is not that it is a downward trend or it's a recession. It is just a slowing down of the growth rates. So I think if that factor in mind, consumer companies are very good bets, because ultimately at the ground level, India is not in a recession. Whatever you say, even an IMF is projecting that next year will be back to 6.5% GDP growth, and when the overall world GDP growth is going to be 3.3. India is going to grow double of the world's GDP growth. We Indians tend to get this pessimistic attitude because we do a lot of our actions based on that huge promise, and when that promise doesn't arise, we tend to get disappointed and extreme reaction. So I think the right way to say is India is a growing economy. Yes, it's growing slower than it should have. It's growing slower than we expected it to, but it's still a growing economy. And then that's where the consumer story is also playing out.
Right. Okay, Sunil, great to have you on the show with us, and we'll chat again tomorrow after the budget announcements done with. It's going to be a working Saturday, remember.